Hi there, I'm from MTA, and today we'll explain switching from cash basis to accruals as a sole trader in 2026 simply.
Imagine sending a client an invoice in December 2025 and finally getting paid in May 2026. Without the correct accounting adjustments, HM Revenue and Customs could tax you on that exact same invoice twice. I am here on behalf of my tax accountant. We guide sole traders and growing businesses safely through the maze of UK tax compliance, so you can focus on running your business. This timeline illustrates a specific deadline. If your gross sole trader income is over £50,000, you must comply with the Making Tax Digital mandate by the 6th of April 2026. HMRC currently sets the simpler cash basis as the default for your tax return, but MTD-compatible software requires digital links to track unpaid invoices and outstanding bills. To handle this complex reporting, growing businesses are effectively forced to switch to traditional accruals accounting. Moving between these systems creates an accounting friction, where income can either vanish from your records or be counted twice over by the tax authorities. This diagram illustrates the timing gap, the delay between doing the work and actually getting paid. To fix this gap when switching accounting methods, HMRC requires a rigid two-step adjustment formula. Step 1 prevents untaxed income from escaping the system. You add your positive components, trade debtors, which are your unpaid invoices, and the value of any closing stock. Step 2 prevents you from being taxed twice. You subtract your negative components, trade creditors, representing your unpaid supplier bills, and any income you received in advance for future work. Let's run a simulation for a digital consultant. Combine £6,200 in positive elements minus £5,500 in negative elements. This yields exactly £700 in adjustment income. Here is a helpful provision from HMRC. You do not have to pay tax on this entire adjustment in year 1. You can spread it evenly over 6 years, adding just £116.67 to your annual profits. Let's test this. A designer has £3,000 in debtors, £200 in creditors, and £1,000 in advance income. Pause the video and calculate the adjustment. The answer is £1,800. This formula guarantees every single pound is accounted for exactly once, protecting the true valuation of your business during the transition. This abstract capital allowance pool illustrates the change for physical business assets. When leaving the cash basis, items like equipment and machinery must be recaptured and brought into this pool under the Section 66A rule. If you bought a £20,000 van and wrote off the entire cost under the cash basis, it enters the pool at exactly £0. You still must formally record it, so any future sale is taxed correctly. If you bought a £10,000 camera on installments and have already paid and relieved £6,000, the remaining £4,000 detaches and enters your new capital pool. You might worry that accruals accounting forces you to pay VAT before your clients pay you. However, income tax and VAT operate independently. You can use accruals for your income tax while remaining on the VAT cash accounting scheme to protect your cash flow. Understanding these isolated rules allows you to maximize your financial reporting accuracy without choking your day-to-day working capital. To execute this transition physically, you must explicitly opt out of the default cash basis by ticking box 8 on the SA103F full self-employment pages. You then take that 1/6 transition profit we calculated earlier and place it directly into box 73.3 of your return. Be careful of double spreading. If you are already spreading adjustments from the 2023 basis period reform, you will now be juggling 2 simultaneous spreading schedules on the exact same return. Compliance depends on 3 specific actions: the 2-step adjustment formula, the capital allowance repooling, and the box 8 opt-out. Anticipating these digital structures ensures your transition figures remain accurate and your tax liability predictable. Navigating Making Tax Digital requires expert planning. Contact my tax accountant today to ensure your transition is seamless. Call us on 0208-570-8531 or visit our website. Please subscribe to our YouTube channel for more tax updates. Disclaimer: this video is for informational purposes only and does not constitute professional tax advice.